Hello and welcome to this week's edition of Invest Africa. I'm Alicia Seckham. Well, just last week, Malawi's public sector made headlines with employees agreeing to a 61% pay hike for the lowest paid employees, almost double the inflation rate to counter the devaluation of the kwacha and rises in the cost of living. During the strike, schools and the international airport were closed, and agreeing to increments means now having to face cuts in other areas where President Joyce Banda has instituted painful economic reforms backed by the IMF and foreign donors since winning office last year. This week, we unpack the opportunities and challenges that Malawi presents.
The southern African landlocked country of Malawi is ranked among one of the world's most densely populated countries in the world, with a population of around 16 million people living within 94,000 square meters of land. Like most developing countries, the economy is dependent on its agricultural sector, which accounts for 1/3 of GDP and generates 90% of export revenue. Although tea and coffee are some of the country's cash crops, tobacco is key to Malawi's economic growth, as it accounts for more than half of its exports, which it trades with India, Germany and South Africa. Import partners include South Africa, Zambia and India, where food, consumer goods and equipment are imported. The overvaluation of the kwacha against major currencies, especially the US dollar, saw an upsurge in import demand. This, coupled with a shallow export base, saw the current account deficit widen to $845 million in 2011-2012. That's from a deficit of $548 million in 2009. However, economic reforms such as the devaluation of the kwacha and a market-determined exchange rate has restored credibility to the Malawian monetary policy environment. President Banda, Africa's second female leader after Liberia's Ellen Johnson Sirleaf, has put a number of reforms in place since taking office in April. These include firing inefficient government officials and implementing austerity cuts, which have been lauded by the international community and are expected to steer the economy onto a path of sustained recovery. Tumisho Makanyele, Johannesburg.
Well, joining me in studio this week to take a closer look at Malawi as a business and investment destination is Simon Schaefer. He's Senior Analyst at Frontier Advisory. Abel Myberg is Associate Director at Africa Desk BDO. And Samantha Louis is Regional Director at the Chartered Institute of Management Accountants. Welcome to you all and thanks so much for joining us. Simon, let's start off with you. I mean, that pretty much setting the scene from a broad macroeconomic perspective. We've got Malawi ranking number 157 on the World Bank Doing Business Index out of 185 countries. It's not very encouraging, but what sense are you getting of the kind of and the pace of economic reform we're seeing in the country right now under new President Joyce Banda?
If you look at the year before, 2011, 2012, actually the business environment has deteriorated to this year. I hope that the reforms initiated by Joyce Banda will bear fruit soon, but I guess it's a long way to go, and it's very early to say after 10 months in power if her reforms will bear fruit. I'm pretty confident that the new policy stance on the devaluation of the currency will, after a short period of hard time where we saw inflation rising, bear fruits, so that the export goods will be more attractive to the outside markets.
For now, though, it's still a very challenging environment we're looking at. Abel, the bar's been set pretty high, though. We've had the President herself saying at the start of this year that we will see a sharp improvement in the economy within the next 6 months because of the policies and initiatives that her administration has put in place.
Definitely, because if you look at the recent visit from the IMF, I think it was 2 weeks ago, in Malawi, there was encouraging messages that came from the talks they had, as far as the commitment she's showing and the government is showing towards developing the economy in the sphere that the IMF wants. So hopefully, well, if anything goes okay, and according to plan of the review, that they can receive I think it's a $20 million US advantage from the IMF, which will definitely help towards that further development
We've certainly got those finance institutions like the IMF and the various donors that do contribute to the economy coming through and positive. Is it enough in your books, Samantha, to restore the credibility of Malawi's monetary policy and that entire environment?
I think it's a positive start. I think there's a long way to go. Economies, unfortunately, never turn around or swing up in 6 months, although the reverse is sometimes true. What I think is probably the biggest challenge she's going to face is how to diversify her economy and how to really build a thriving economic sector that's not totally dependent on her agricultural imports.
That's exactly it. We've had the insert able highlight that 1/3 of GDP is coming through from the agricultural space and generating 90% of export revenue. And so you've got that diversification or lack thereof flashing red on the radar screen right now. What do you make of the kind of stride that's being made to diversify that economy at this stage?
Yeah, it's very interesting if you look at that in terms of the incentives that's coming through for the government as well in the agricultural sphere. One's not only looking at it itself. There's obviously spill-offs industries that can make use of the agricultural sector. And one of the interesting facts that I notice is that agricultural, especially in tobacco and tea, is now seen as manufacturing, so they can then get the benefits that's linked to manufacturing in terms of huge incentives. So that definitely one can see from the development thereof, that there will be the diversification, from that industry itself.
Simon, it's going to be a tough road ahead, though, especially where you've got the IMF recommending cutting or postponing non-essential spending, because there's a fine line, because it's that spending that would actually work to get the economy on the right path, but you've also got to make sure that where you are cutting back, it's not acting as a disincentive to business.
Yeah, well, I think that's always the challenge, that you balance here the twos. That you, on one hand, you try to restrict what you're spending on, and on the other side, you have to spend on the right things. If you look what happened after devaluation, that, for example, the fuel prices went up quite substantially. If you look at that in rand terms, I think the liter of petrol sells at 17 rand, which is, for an extremely poor country, extremely high. So maybe there needs to be some measures in place that counter this kind of development. Yeah,
if you're looking at that, we've had, Samantha, government putting some incentive on the table. I mean, I picked up that we're looking at taxation policies, for example, that are pretty standard, broadly speaking, but there's a 0% for 10 years or 15% for companies operating in priority industries. What do you make of the effectiveness of incentives like that?
Incentives are always a challenge, because if you don't manage them quite carefully, people come in, take advantage of the incentives, but they don't deliver the results that they're intended to deliver. And I think what we're seeing is a political will to engage and to incentivize people, but it's going to be key how they manage how those incentives are operated over the next couple of years.
Not only key how they manage that entire implementation, Abel, but there's a danger with incentives like that, in that once it's put in place, it's very hard to, to reverse those policies. So how do you mitigate against the risk that brings to the table for investment?
I think that's a problem with any developing economy, that we try to balance it off in terms of incentives, to bring in the new investors, not only foreign investors but local investors as well. And so for me, there definitely need to be strict policies in place, to monitor this, based on certain regulations. But also, you also don't want to run the fear of negating whatever you've built up so far. If you look at later developments, in terms of the New Companies Act and so on, to make the ease of doing business easier. But there are certain areas that could be looked at. For me personally, what is one of the problem areas in Malawi is the lack of infrastructure as far as power and then electricity. It goes with that, so that constraints on prices that's charged.
Yeah, you've got a lot of emphasis being placed on the kind of capital investment companies themselves can bring to the table. Simon, we've seen certain allowances for expenditures. For example, 40% investment allowance to a manufacturer in the first year for new machinery, mining allowances of 100% of mining expenditure incurred in the first year of assessment as well. It hasn't seemed to be triggering enough of an attraction, though, because we're still looking at an economy that isn't diversified?
Well, I have to add to Abel's point. Obviously, if you have incentives in place, you have the risk of a race to the bottom. Everybody in the region is trying to get incentives in place to attract investments. Yeah. And if you don't have the infrastructure in place, you can have the best incentives, but nobody wants to produce in your country. Mm-hmm. So if you don't have the power to produce, if you don't have the infrastructure to get the product out to market, the incentive itself doesn't help.
Absolutely, and that also hinders just how much these investors can play their part in contributing to this economy.
And it's a landlocked country with, geography, I'm afraid, can't be changed. So that brings its own constraints and challenges. I also think the cost of doing business once you're there needs to be looked at. Things like, can you get the right people with the right skills to be delivering productively? The insert said that they were going to be getting rid of unproductive government employees, and that, I think, is a challenge probably of governments all around the world. But in addition to that, what I'm encouraged by is seeing, for example, the Accountant General, the Auditor General, putting in schemes to really train their people at the highest level. Yeah. And I think when you have productive civil servants who are properly trained, who are efficient, and are really good at delivering what needs to be delivered, then that's a step in the right direction too.
And who can be trusted as well, because we've had corruption glaring very brightly when it comes to government officials and their management of the economy as well. What's interesting and being highlighted is that the country doesn't offer any special incentives, Samantha, to foreign investors, and that incentives for foreign investors have to be specifically negotiated with by the investors with government. I mean, that seems like very fluid policy, and is negotiation the right route to be taking here? Because that then leaves room for corruption if you don't have the right governance structures in place.
Potentially it does, but I think it also gives the government the opportunity to make sure that it attracts the investors it wants to work with.
I asked the question, Abel, because surely this opens up an uneven playing field.
There's positives and negatives. I mean, what I've found through the whole of Africa, that accounts for most of the African countries, that if you try to minimize the almost, what can one say, the actions from government to a central investment agency or a promotion agency, then you eliminate the possibilities of corruption and bribery, because you centralize it through one central agency, which then can negotiate on that terms with the government. And so she actually almost leveling the playing fields as far as I'm concerned, so.
Well, let's hit pause on the conversation for now. We're heading into a quick commercial break, but there's more on Invest Africa when we return, so stay tuned. Welcome back. You're watching Invest Africa. Well, just over a month ago, cash-strapped Malawi announced that it will be inviting bids for the president's jet as it tries to raise much-needed revenue. This is a continuation of the cost-saving measures vowed by President Joyce Banda to accelerate economic recovery in one of Africa's poorest countries.
According to President Joyce Banda, before taking office in April last year, Malawi's economy had almost collapsed. Relationships with countries' neighbours and with key donors such as the IMF and Britain had been strained. The Malawian government then embarked on a two-phase recovery plan. The immediate phase to restore stability included austerity measures that were criticised for adversely impacting on the poor.
We needed to take those steps. We needed to make bold steps. We needed to devalue the kwacha. But what we needed to do is also to inform Malawians, to sensitize Malawians, that it was going to get hard before it gets better.
The medium to long term focused on restoring donor relationships, but with an estimated 40% of Malawi's budget funded from financial aid, this has left the country financially vulnerable.
What we should look at, though, is the end intention. Basically, that several African countries, not just Malawi, including Rwanda, try to wean themselves off that debt in time. So as we progressively move forward, we hope that 40% drops to 35, 30, to a point where the government becomes self-sustaining. I think that's the end intention. I think the big concern is when diplomatic relations with the international community turn sour, then there's an abrupt switching off of that tap.
To move forward and in a bid to become more self-reliant, the Malawian government then identifies strategic sectors pivotal to empowering the country's economic growth.
There are several other things that we have done, we have to do in the social sector that will, for me, will translate into my country is growing, my country is prospering, the lives of the people is improving, rather than just money.
Still with me in studio is Simon Schaefer, Senior Research and Strategy Analyst at Frontier Advisory, Abel Myberg, Associate Director at the Africa Desk at BDO, and Samantha Louis, who's Regional Director at the Chartered Institute of Management Accountants. If we get back into looking at this economy becoming more self-sustaining, Abel, we've got the government, as we heard in the pack, identifying key sectors that are pivotal to actually powering that drive moving forward. Let's explore, but the kind of opportunities that this economy is putting on the table for investors.
Look, I think in terms of that, you need to look at current economies that's there, industries then maybe build around them. For instance, in agricultural, because that's part of Malawi's setup, is agricultural is one of their big industries, but then you can develop around that, in terms of exporting, making sure that not all the raw goods are exported, but then you can put in a process of processes in place to develop the goods, especially if you look at what do you call it, in the meat industry. There's several industries that can actually benefit from the meat industry. Look at dairy as well. That's interesting in the facts when you came with Malawi is one of the countries with the lowest milk consumption from all African countries, but then you sit with this massive production of milk, so you can look at the regions, for further exportation of that.
Yeah. Is investment perhaps being hindered, Samantha, by the fact that we're looking at a population where 74% of that population lives on less than $1.25 a day, and you've got to, as an investor, look at that market you're catering to, because at this stage of the game, it seems like you're moving in to export your product.
Indeed, and I think we've seen examples in Africa where large multinationals have been really clever about how they repackage their product for people who are in low-income environments. And, for example, instead of selling your washing powder in a big kilogram box, you're selling it in small amounts that can be purchased on a daily or weekly basis, where people can use their cash income to support that. So it is about being clever about how you package things and how you distribute things. But I think you also need to make sure that even if you are manufacturing in company for export, that you're leaving a proper legacy behind, and that you're upskilling properly, you're paying people properly, real jobs, economic jobs.
Yeah, I ask because, if you're looking at a company setting up shop in a country like Malawi, you've got to look at those cost pressures that get exerted, and part of that coming with the challenge that the lack of infrastructure, or that infrastructure deficit, brings into the equation. Simon, just how much stride are we seeing in the government investing enough in infrastructure, enticing the private sector to venture into PPPs with them?
I must say that, for example, the road infrastructure is not as poor as people would expect. 2 months ago, I drove quite a bit in Malawi, and the infrastructure was relatively decent. Obviously, if you have a lot of trucks, for example, exporting sugar, which is produced in central Malawi, you have the problem of a lot of damage to the roads because of the heavy trucks. So I think it's not necessarily only building new infrastructure, but maintaining the existing infrastructure.
Yeah.
Just recently, I think it was last week, the government announced that it will cooperate with Chinese companies to upgrade the airport in the capital, as well as in the commercial hub of Blantyre, and also to build a new airport on the southern tip of the lake to boost tourism in that region. So I think there's certain things which are already in place, but I think, as I said, the maintenance of the infrastructure is necessary. As well, you have to improve the power situation. Power outages are a nightmare to companies that are producing.
Well, we've got unreliable power, water shortages, poor telecommunications infrastructure. All of these are impediments that impact productivity of any business in a big way, Abel, but just as much as a shortage of foreign exchange does. So how do you mitigate against that kind of risk? Because that certainly damaged the country's reputation in terms of its ability to pay for imports.
That's very true, you know, because I think it is one of the pressures that's from the IMF as well upon the government of Malawi is to bring in proper structures and proper policies in terms of their foreign exchange to ensure that there's enough foreign exchange available for investors, you know, when it comes to exporting of such, you know, and even repatriation of profits and dividends, you know, and then with that you need to balance again, you know, against your GDP, you need to look at your inflation rates, you know, so that's such a fine line. But I was quite impressed with the earlier comment that we made, you know, in terms of we need to educate as well, you know. So I think that's a role that some of the bigger nations can play very, very closely in Malawi, you know, especially in the region, because it's a strong region that we are in.
Samantha, at the end of the day, the investors are going to weigh the risk and the cost against opportunity and ability to actually rein in profits. Bottom line, is it worth it?
Oh, I'm an Afro-optimist, I'm afraid. So yes, definitely.
Definitely. Okay. For those who have seen the opportunity, it hasn't been all, you know, smooth sailing. Halfway through last year, government enforcing a law barring foreign investors from carrying out trade in Malawi's outlying rural areas. I mean, that was seen as an attempt to protect your local small-scale businesses from competition from foreign investors. You've got to look at the kind of message that sends out, where you've got people trying to be optimists.
You do. But I think in a society like that, you have to understand that there's a move to protect people from potentially being exploited too. And so I think it's about balancing both sides of the coin.
It can't, you know, help but make you wonder, though, where that line gets drawn, Simon. I mean, bringing investment uncertainty into the forefront, because, you know, investors would get nervous entering that kind of scenario where government can dictate where you can and cannot do business.
Well, you also find those kind of developments in other countries on the continent, so I'm not sure if it's a unique Malawian problem. But obviously, if you want to protect an infant industry in certain parts, be it, for example, small-scale agro-processing, I guess a small company in the rural areas can't compete with a multinational coming in processing sugar, processing flour or something. So I think there is some sort of rationale behind it that you want to protect, but on the other side you have to be very careful what kind of message you send out.
Because you've got able governments saying rules should be respected and we don't encourage traders that go into rural areas, we encourage real investors. What then constitutes a real investor?
Yeah, that's an interesting question when it always comes to Africa, you know, because we always say we have the law, and then the application of the law could be interpreted differently by various parties. But what's encouraging to me is that they've got proper legal setup in place, in terms of the Investment Act and the Companies Act is going to be changed now as well, you know, to give clear definitions of this, you know, so that you don't have this maybe this and maybe that, you know, attitude. So that to me is encouraging, and investors must use that as well as a positive. Yeah. So that you have means of going to arbitration or defend your position in that country.
It's easy to see the kind of rationale that the government is coming to the table with. Samantha, Malawi, though, puts itself in a very precarious spot when those rules get bent. I mean, in a bid to develop diplomatic relations, we've had China managing to influence economic favors its way in exchange for loans, grants, development support, helping develop the country's productive capacity. Some are not happy with the kind of influence that China has on the Malawian economy on the one hand. On the other hand, we've seen the country abandon ties that it's had with the likes of Taiwan over 41 years. So is this a country that needs lessons in diplomacy?
I would suspect that Malawi would not be the only country in Africa that has strong ties with China, and you may wish to add to that. China is looking at Africa and making inroads in Africa and working very closely with governments across the continent. So I would not say that Malawi is unique in that. And certainly Chinese investment comes with conditions.
Yeah. How does the country then, and like you highlight, many other countries on the African continent actually work to work these relationships so that it does, at the end of the day, work to their favor and not deter other foreign investors from coming their way?
You know, I do think that the new president has really made a concerted effort to rebuild diplomatic relationships than what we'd seen under the previous regime. And I think that is, again, a time-consuming thing. It is about building trust. It is about showing that you're committed, showing that, yes, you're prepared as the president to sell the presidential jet. That's symbolic, of course, but it does send a very clear message.
Well, certainly work in progress that we're seeing unfold in that territory. Thank you so much for having joined me at the desk today. We've come to the end of this edition of Invest Africa, and my guests were Simon Schaefer of Frontier Advisory, Abel Myberg of BDO, and Samantha Louis, who's of the Chartered Institute of Management Accountants. Until next week, from me, Alicia Seckham, it's goodbye.